Welcome back to the Financial Independence Network. Today we're talking about AMC, the movie theater operator that's hoping to win big with its upcoming shareholder meeting. Make sure you hit the like button if you want to see more content like this in the future. Also, comment on any other finance-related topics you'd like to see. First up, AMC is seeking approval for 3 proposals, including converting its preferred equity units called APEs into common stock and executing a 1-for-10 reverse stock split. Ah yes, because when it comes to finances, why make things simple when you can make them confusing? Now, the company aims to raise $110 million through these moves to reduce its overall debt and improve its finances. Wow, $110 million? That's like one Avengers movie's worth of ticket sales. And it seems like AMC has some powerful allies in its corner. 2 influential proxy advisors that will manage these transactions, Egan-Jones and Institutional Shareholder Services, ISS, have backed the initiatives, but not everyone is on board with these proposals, as they've generated controversy among investors. I mean, who would have thought that turning preferred equity units into common stock could cause chaos, right? Despite the potential legal hurdles, AMC's shares were up by 7.3%, and its preferred stock, APEs, was up by 8.4% heading into the market close last week. Looks like investors are still excited about the future of movie theaters, or maybe they just really like the smell of popcorn. Now, AMC recently reported its full-year results, showing revenues of $3.9 billion and losses of 93 cents per share, which were 18% lower than expected. If only they had a blockbuster hit that could make up for those losses. Let's see what future Marvel movie will break the opening day record. But there's hope on the horizon, as 7 analysts have forecasted revenues of $4.4 billion and a decrease in losses of 79% to 40 cents for 2023. And finally, the consensus price target has fallen by 20% to $2.39, with the range of analyst estimates all over the place. Hey, at least there's some consensus, right? It's not like everyone has their own opinion on the matter or anything. Despite the ups and downs, AMC's rate of growth is expected to accelerate meaningfully, with revenues forecasted to exhibit 12% growth on an annualized basis to the end of 2023. So, it looks like movie theaters might still have a chance to make a comeback. And that's all for today's financial news update. If you enjoyed this information, please comment, like, and share. Also, make sure to subscribe and hit the notification bell so you don't miss our Friday series on the steps to achieving financial independence. Thanks for watching.